Hello friends and welcome to Finance Logic YouTube channel. My name is Evgeny. I am certified financial specialist with 10 years of experience working with big time consulting firms. And I'm also a financial coach and independent financial advisor. And my purpose is to save your money today. I want to focus your attention on 3 simple things that you need to be aware of before starting your investment. Or if you have already started making your investments, you can adjust it in accordance with what I'm going to tell you. Let's start. Thing number 1. You need to determine your ability to take a risk. It is very, very important, and I think that it is a first priority question. You have to determine your ability to take a risk, because investments are associated with return and unfortunately with risk. And your ability is determined by many factors. But the key factor that has direct impact on your ability is your age or your future human capital. If you are relatively young, you have high ability to take risk. If you are relatively old, you have low ability to take a risk today. Because if you are young, you have many years, many active years, many years when you earn money. If you are young, you have a very significant human capital. Your human capital is your future cash inflows that you will earn during your active life. If you are relatively old, you have less future cash flows and you have less opportunities to recover your lifestyle if you have any problems with investing, if you deal with risk. So when you invest, it's very important to consider not what you already have, but also your future cash flow pattern. It doesn't mean that you need to predict your future cash flows during, for example, next 40 years. But you cannot ignore your age. If you are young, you can take a relatively high risk. The next thing, the next determinant of your ability to take risk is your current wealth. How much wealth do you have right now? If you are relatively rich, your ability to take risk is high. It means that your lifestyle would not be changed dramatically if you deal with significant risks of your investment. If you are not so rich, if you have only one house and one car, you have less ability to take risk, because in this case your property is very important for you if you have only one property. And don't forget that you should consider your age and your current wealth in combination. For example, if you are young but you don't have your own house, you have probably a quite high ability to take risk, because if you are young, you have tens of years ahead, tens of active years ahead, and your future cash flow is very, very significant. Next thing that determines your ability to take risk is your individual circumstances. And this is about your lifestyle and about your current needs. For example, you need money only for regular traveling. In this case, you have a high ability to take risk, because if you lose your money, if you deal with risk through investing, you can postpone your travel and it's not critical for you. But if you have to repay mortgage on your house, or for example you have to pay education, in this case you have low ability to take risk, because these future payments are very important for you. They are much important comparing to payment for your next trip. So thing number 1 is ability to take risk. That depends on your age, your current wealth, and some of your individual circumstances that you have to consider when you plan your strategy and you plan where and how to invest. Second thing is about knowledge of asset classes risk-return profile. Asset classes are categories of assets which are potential object of your investment. For example, asset classes are bank deposits, bonds or fixed income securities, stocks, real estate, derivatives, art, or cryptocurrency. So in order to match your ability to take risk, you have to know risk-return profile of asset classes which are your potential investments. Let me give you just an example of how risk-return profile of these asset classes looks like. For example, cryptocurrency has the highest expected return but the highest risk. So you can invest and you can get a very significant return. But to bet for this return, you have to take a very significant risk, the highest risk from all asset classes. And bank deposit usually has low risk and low return. So match your ability to take risk with the risk return profile and pay attention also to liquidity of each asset class. For example, bonds, deposits, stocks, if they are tradable, they have the highest liquidity. Art objects or real estate has the lowest liquidity. It means that you need much more time to sell your real estate and to sell your art object comparing to selling of bonds, stocks, or even cryptocurrency. And thing number 3, you need to decide who you are. Are you active investor or are you passive investor? You should be active investor if you have enough time. You have enough time to trade, if you have enough time to rebalance your portfolio, if you have enough time to manage your own investments. You should be passive if you have some better alternatives. And these alternatives are not always about money. So you may have some sport activities as your own hobby and you don't want to forgive your sport activities because you have to observe your investment and maintain your investment portfolio. Or you are high-paid specialist and it's better for you to continue your ordinary work instead of looking at the monitor what is going on with your investments. And if you are active investor, usually you have opportunity to invest with any time horizon. But if you are passive, your time horizon should be quite long, because if you are passive, it means that you don't have enough time to follow and to maintain your investment. So in simple words, passive investor is the one who invests and waits long time, then good things come. And my advice to you, be active investor only if you have relevant experience or high ability to take risk. And you need to decide whether your time spent on planning and managing your own investment brings you more value than any other activities you may have. So that's all what I wanted to tell you. Of course, these 3 things are not everything that you have to know when you start your personal investing, but they are very, very important. I hope that my advices are useful for you. Write questions if you have them in the comments, and I wish you only profitable investments. See you next time.